Okay, welcome everyone. I'm going to get right into the stock market technical analysis. Light week this week, and so we've got a couple charts to kind of point out. There's a couple trade ideas out there that might play out. Again, it's a very light trading week, so a lot of institutional players, a lot of trading desks are out on vacation, and it's just a lot of choppy retail trade basically. So keep that in mind. I think it makes sense to keep things light. And as such, I've got an eye on the markets, but not really focused completely on the markets this week, and just watching the charts all day long. So keep that in mind. Okay, we're going to start out with triple Qs. All right, so the last couple days, we've seen this Santa Claus rally. We've just seen pretty much just a complete bid for stocks on pretty low volume. So I don't talk about this too often. I do teach it in my course, but it's a volume divergence. So you'll see how the price is just moving higher like that in triple Qs. And you'll see the volume is just less and less. It's just kind of dropping off basically. Usually you want to see on a price move, you want to see volume kind of moving with price. You want to see volume increasing. So if you have a breakout move or an upward rally, you want to see volume increasing. Here we have price moving higher on less and less volume. So it's just not confirmation, kind of a non-confirmation move where we have a rally with less and less volume. And it's not so much that it's low volume, it's just decreasing volume, I think is what makes sense there. So that's volume divergence. And we're near the all-time highs here in triple Q. We'll see if we break above there. I'm not exactly sure if we're going to. If I look at the weekly chart on triple Qs, we had this bearish divergence candle going back here. This is basically on the week of November 22nd, and this candle engulfed the previous two candles pretty much right here. And then we had a follow-through candle. So I really wouldn't want to see this candle taken out. So what does that mean? Well, we really shouldn't have a weekly close above that area, really about 406. You get a weekly close above there, and you're likely going to have more highs coming in the near future. So until I see that weekly close, this candle right there is still intact. It is still a candle you can trade against. And again, this week is pretty low volume. So what I would take what happens this week and kind of throw it out as an outlier. Wait till we get into the beginning of next year of 2022 when the trading desks all come back, and let's see what the institutional players really want to do. They have the money to move the market around, so we'll see what kind of positions and what they end up doing. So that's what I got on that one. SPY did make an all-time new high, and I'm still on the weekly chart. We did have a bearish engulfing right here, and this engulfed the previous three candles with confirmation. So let me just kind of mark that out for anybody that doesn't know what I'm talking about. There's your bearish engulfing candle right there, and there's your confirmation right there. But this week right here, we have recovered it, and we're above that. So the week's not over. A few days left. We'll see where the week closes. But again, I wouldn't want to. I don't want to see a weekly close above this 471.20 to keep this bearish engulfing intact. That's really it on that one. Now, again, like I said, the week's not over. We have a few more trading days left this week, and a lot can happen. We also, looking at the blue line here, I've got some resistance I've marked out really from the highs. You can see this is going all the way back to 2010, but you can see this trend line started really here. Here's some more resistance, and as I move in, this is basically the area of resistance as well. So we'll see what the week brings. Looking at the daily on the SPY, you can see we're just kind of trading right into that resistance area up there. So, really for me at this point, it's just about where this week closes. I don't see any trade to really take right here and now. Yeah, you could try to take a shot short right here at this resistance level. But I'm really more interested in to see what this week brings, and really what the beginning of next year brings. So I'm just keeping it light. Here's a trade idea. This is the semiconductors have really been on fire recently, but I see this one AVGL Broadcom trading right into key resistance right now. So it looks like a good area to establish a short position right at this resistance level. Let me roll out on this daily chart. You'll see here going back to pretty much 2020, April 2020, this one established a pretty clean trend. I've got every tag of support circled out. And we broke that support, and it's been pretty much trading below that trend line ever since. Tagged resistance once, kind of drifted sideways, and it's had this pretty big ramp. Now that's a big move, and that's why, you know, when you break support, you don't want to give it too much room. I mean, you need to give it a little bit because it can backtest, but you know, this thing is ramped up, what, 40% on this most recent backtest. And so obviously you wouldn't want to ride that out if you shorted it here on the breakdown. So zooming in right here, we're pretty much right at that level, at resistance. They're popping it slightly. You can see just intraday, you know, a couple days are kind of chopping through here and popping it. But it's right at the key level where I'd expect a gap down and some sort of impulsive sell down from here. Looking at the daily, no real negative divergence on the PPO. You can see we're just, you know, moving higher in price, higher in momentum on the daily chart. But if I zoom down to the hourly, I'm seeing it start to show up. So I'll show you guys that. Here on the hourly, you can see that we are clearly starting to, we have a confirmed negative divergence now on the hourly, on the RSI and the PPO. See that bearish cross right there? See how it crossed down? And this is all starting to point down. That's confirmation. So you've got a high, a lower high, and with confirmation on both the PPO and the RSI, and yet you've got price has a high and a series of kind of grinding higher highs. So price is diverging from momentum. Momentum's moving down, price is moving up. That's a leading indicator that you're likely going to see a trend reversal sometime soon. And to have this trading right into key resistance like that, I think this is a pretty key area, pretty good area to establish a short. Now you got to give it a little bit of room. Obviously, it's a light volume week, but I suspect that when the big boys show up next week, they'll sell this thing down, seeing where it's trading at. So I took a starter short on it and looking to add once I get some confirmation, you know, when price starts to move lower and I get some sort of a gap down or some sort of impulsive sell down candle, I'll probably add to that short. And BABA, this one is actually setting up for a long trade. Now lots can happen, but basically you can see we're drifting lower in price and we're about to make a new low. I think we've got a little bit more to go to the downside, but if we can undercut this 111.77 area and make kind of a new low in price, if we do that anytime soon, we'll likely have bullish divergence, meaning that we'll make a higher low. So the way I see this playing out is we drift down in price, make a slightly new lower low, and yet momentum just kind of comes in right here and makes a higher low. So you have a low, a higher low, like that, and yet price will make a new lower low in price. That's bullish divergence, and that's the setup for a long trade. Now, it doesn't mean that you just take a long trade on that divergence, but what we'll look for then at that point is some sort of a break in trendline resistance. And to get that, you know, probably on this hourly, we'll want to see something, you know, basically something that breaks like this. It'll likely set up on a bullish falling wedge pattern. It'll be something like that. And we'll wait for a break of this trend line right here on the hourly chart. Okay? And if we get that break, then, you know, I can see BABA running up and filling this gap at 161.86. Okay, so there's a lot of, you know, if this happens, then we'll take action. But that's kind of the setup I see starting to set up and firm up. We'll keep an eye on that one. Okay, QCOM. This looks like a good short as well. We're right at key resistance. So on Qualcomm, a couple things on this daily chart. You can see we're just drifting higher here on the daily. This is really going back to November. And yet momentum is just dropping off. Pretty clean and clear divergence. Look at that momentum just completely dropping off while price is just making new higher highs like that. So that's a clean and clear negative divergence. This is your last divergent highs right here. We made new highs, and then we broke this trend line. So if I go to the hourly, we show this trend line a little cleaner. You can see there's where we started the trend. That one came close. They bought it there, then we broke, and boom, we're right there at resistance. So this can pop and continue to kind of grind along this resistance, but I don't expect it to go too much higher. Risk reward is to the downside. And if I move out to the daily, you know, you can see, yeah, I can pop up and maybe grind along this, maybe make a 2.5–3% gain to the upside, and then the reward first support is right here at 171.50. So, you know, if we were to head down now, that's a 7% drop. So you got a 2% risk maybe to the upside with a 7% drop. That's just to the first support. That's a good risk reward ratio. And then if we break that support, which I think we will, then we've got this gap all the way down here to fill it, 139.24. And so the trade that I like is to short here for a gap fill, and that's a 25% drop. So I like that. I've, you know, again, I was shorting this here. I covered it when the Qs looked like it wanted to rally, and I just haven't really messed with it. But now that we've rallied right into this support resistance area, this resistance right here, it's a much better area to short at. And so again, I'm reestablishing my short right here, looking for a pullback. Now we're probably not going to get it until the next year. I think we'll probably just grind around in the market. But come next year, I think we'll probably start to resolve to the downside on this one. And you know where to stop out. If you maybe they recover this and just ramp this thing higher, you just stop out. If you might want to give it a little room. Maybe they're going to pop it to try to make a slightly new high, but I wouldn't look for much more than a new high. So I'd be looking to stop out above 192.70 or a little bit. If you can hold up there and start to build on that, that's where I'd look to stop out at. Roku looks like a long to me. It's not actionable yet, but things I want to point out: bullish divergence right here. We've got that on the daily chart. So this. We've dropped down and made a new lower low in price with bullish divergence. Now we've got resistance right here at about 236.34, a break above that, and I think we're going to head up to this next level of major resistance, 294.40. That's good, strong resistance. You can see all the tags that we held as support back then. So I think a break above that level again it's about. Zooming in, I've got it about 236, 237. Then that should be a move on up. And that would be a lift of about 24%. So I like that for a long trade on the buy signal, which would be a break of that key level right there. And gold, here's gold bullion. Slow and steady wins the race is basically what I'm seeing here. So gold's got key resistance right here at 1833. All right, you can see all the tags of that level. We got 1, 2, 3 where it's held. We broke above it, and it was a false breakout. It broke back below. Big impulsive breakdown, false breakout, bull trap on that move. A break above that again, and I think that's going to be the real deal. So that's really what I'm looking for. We're range bound until then, so I would look at that as being key resistance. And below, because we have a upward trend line coming back here from 2018, see all the tags on this daily chart of support? We have this ascending trend line. That puts that trend line right here at 1772 today, and that's ascending. So basically, we've got kind of a rising floor, and then the ceiling is right there, that 1833 area. So a break above that, I think we'll have the real deal breakout. We also have a potential triangle. I've got the tops marked out, so maybe we're going to consolidate and then boom, pop like that. That's what I think is going to happen. Gold still looks good to the long side, and the miners are, trading accordingly, looking good as well. And soybeans. Soybeans still looks good. Looks like it's breaking out to the upside, is basically what we were anticipating. This one, it's not going to go straight up, but these do tend to kind of go parabolic a little bit. I do think we're heading right up to that 24.83, and as you can see now, price is pretty much, we're almost halfway there to that target. That's kind of your former high. This one had a downward price channel. We had bullish divergence being put in, so I got these divergent lows circled right here. We broke. There's your breakout and your back test, and then off she goes to the upside. So So far, so good. You know, this one, if you got it on the initial breakout, it's up about 6-7% with another, oh, I don't know, probably another 6 or 7% to go. So all in all, a 14-15% trade to the upside if we can hit that price target. So that's what I'm looking for. Looks good. And I'll wrap up with AMC here. So you can see AMC, we've got a key level of support, which is now resistance, and it's about right there, 30.09. You can see this was your pump, your big momentum field pump, and then every time we get down to this key level of support, they've held it. You can see there, we held it here. Finally, it broke, and once it broke, there was pretty much waterfall selling down to the next level of support, right about 20.50 or so. And, you know, from that break right there, that was a drop of about 30% in a matter of just a couple days. It bounced off that level. Buyers stepped in a little bit early. We bounced right up to that resistance, popped it a little bit. See the wicks? See how we pop above it, run a bunch of stops, and now we're just heading lower. So I think that was kind of your key objective area to short at, which is about 29, you know, it's about $30. And we actually got there today too. It ran right up to resistance and it's been selling down. So I'm looking for us to go down to that 2035, 2050, probably break that and head lower. Next level of support we've got marked out right here. So we'll just extend that out, and that would be next level of support is about 1450. And from where we're at now, that is a drop of about 47%, almost 50% drop right there. And it's likely to happen pretty quick too. So there's nothing really holding this thing up except for momentum. And if the momentum's to the downside, expect all those diamond hands people to, start to panic sell as they see losses starting to build. And that's what I'm looking for. So I am short this one as well. I just reshorted it right up here at this $30 area. And that's all I got, guys. I hope everyone has a great holiday time. And leave me a thumbs up on your way out. Check out the stock market technical analysis course during this time. You know, the markets are slow. I think it's a good time to add to your skills, learn a new skill set. Link in the description below. It's a $99 course for about 4 to 5 hours of video training. I go through multiple different concepts. So check that out. I think there's a good value there. And I will catch you guys on the next video.